Flipping across to gold. Pretty sort of stagnant week. Certainly towards the end of the week, we were stuck in a very sort of tight range. I mean, obviously a little bit easier to sort of see on the lower sort of time frames, but you sort of see this little area of congestion here. I mean, this is between what the 38. Yes, we got the spike down here, but you don't really include this. That was NFP flick. But between 30 and 38, so 80 tick sort of range. And that was through all of Thursday session, all of Friday session. It was just stagnant. So as you can see, it's just sideways. And then if you were sort of like trying to buy the break here and had your stops too tight, perfect sort of NFP fashion, they would flip it, take you out quickly, and then sort of bang, sort of shot back up here. So interesting to sort of see what it's doing. I mean, gold, I mean, at the moment, I think a lot of the market want to sort of see it push up. But I mean, we had a pretty good rip about 2 weeks ago or so where we came off the sort of night was a sub 1800 level. And I mean, if we look from here, 1892 up to 1986, that was an incredible sort of run. And I think sort of people are wanting to sort of see that continuation. But of course, those 80s are really tough. And they sort of played a very significant point sort of when we were on top of it as well. So if we drag it right back here, we can see how many times that the market sort of really sort of said, look, you know what, this is I'm going to buy it here, 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 going to buy it here. It was just crazy how much it held. And then obviously once that last little one coming back down after that big flare up to what could have been sort of all-time highs, um, basically we're seeing the reverse. And now I'm going to sell it here, going to sell it here, going to sell it here. And once we sort of started to see that it wasn't even sort of having enough buying power to sort of push back up to retest those 80s, we've just seen this complete sort of meltdown here. And I mean, this is going back sort of start of June, and this is what's obviously sort of curled and rolled over, went down, down to sort of obviously sub 1800. And we saw that next line, sort of the 60s, basically playing exactly the same part, sort of, let's buy it up here, let's buy it up here, let's buy it up here. And that did that whole sort of section of holding it, excuse me, as a very strong sort of support. It obviously sort of came in as a bit of resistance down the bottom here, but this also led to a nice sort of head and shoulders or inverted head and shoulders that we sort of had come across here. Take this off. And you sort of saw this sort of section happening down here, bang, which gave us a nice little sort of measured move that we could have worked out. Sorry, that we did work out through this middle section here. That was a sort of bit of a rough guidance, and bang, up around here. And obviously, plus minus a couple of dollars either side of it all, but pretty much perfectly sort of played out. So, you're seeing these zones that are really sort of being the main sort of key levels for it all. And, oh, sorry, I said 60s before, but yes, there's obviously your 30s. So we're sort of seeing that again, these 80s, like we had previously, they're sort of coming in, they're playing a significant point. The market wants to sell it here, sell it here, sell it here. We failed to even get this one back up to test the 80s. And so what do? We sort of come back down here, we melt back down. And once again, we're finding ourselves in the 30s, and we're sort of wanting to try and sort of find the market valuing it here to sort of see if we can push it back up. So this is on the 4 hour. As you can see, sort of the 20 MA in that, we've actually, like, it's not a super strong sort of reference for it all, but I mean, it is sort of showing vaguely where we're at. As you see, it likes to dance around it a lot, even at the best of times. So probably not the best indicator on the 4 hours here. But the big significant part is that we had this little consolidation range here, and we've broken above it, we've back tested it, and we're sort of just doing a very small consolidation into the end of the week above this zone, which obviously we know, as I said previously, that this is quite a strong area of support or of swing. Basically, it's either going to be a support or it's going to be a resistance. And the fact that we haven't sort of committed to the downside here, market's valuing it, they want to buy back up. So realistically, we can start to expect that we may see a push and a drive towards this area back over here again. So that's what we're looking for, sort of moving forward short term. I've also sort of said that the DXY I think has got a little bit of short term sort of downside in it. So I think that could work well in favor of gold being a little bit stronger. As to sort of getting back up to the 80s, obviously it's not a guarantee in that. We've still got these lower highs coming in. So these are the kind of levels that we need to start to show that, look, we are going to be coming past these now. So I mean, as you can see, it was coming down on a bit of a gradient here, so I wouldn't be surprised to see some reactions around these levels on the way up. Obviously, these things don't go in one line; it'll go through churning up and down. There are a couple of sort of points where we could expect to see people go, okay, yep, that's enough for us now. We'll push it back down, and then if we do sort of then overcome them, then we can look for the higher ones as well. Because it has been so choppy through here, there's not a lot of nice sort of clean levels that we can see. I mean, if we sort of drag across a couple here, look, we can obviously sort of call this a bit of a zone here. But again, if we look at it, there's obviously a little bit of another zone just up in here. We see market had priced it here to drive it back up. They'd obviously seen it, okay, here's my chance, boom, I'm going to sell it, and we've come back down here. So, when we start to sort of line a few of these things up together, I think we can start to go, okay, well, these are realistic sort of levels where we could see the market react. And if they want to try and drive it back down and the sellers are still keen and, people at the market's buying the US dollar, well, these are the points that I'm going to be looking for them to sort of start to sort of sell it back down and start to get short and obviously target this zone here. A big close underneath this zone here will be significant. And if you see a close down under here, well, then we can start to drag this down here and go, okay, where is the market valued at previously prior to this? And obviously this is around this 1900 level, which is obviously quite a sort of strong level, both sort of mentally and obviously you can see that it's been respected a few times previously as well. So the market sort of sees this as okay. That's a level I'm happy to buy it at. But in the short term, I mean, if you look at this sort of bullish looking sort of candle here, just coming off after the doji, they did the typical. So gold loves to sort of just like before they make a move, they're going to go and sort of whip you out first. They're not going to let anybody sort of make money easy on gold. So you need to have your stops a little bit wider, your position smaller, whatever it may be. But you need to be either sort of waiting for that little break and then jumping in, or have your stops a bit wider. Because as you see here, I mean, look, all these sort of things, it's always with the turnaround, but comes here, bang, flips it, and then goes up here. Not quite sure what's sort of going on here. I'm pretty sure this may have been sort of false data to sort of get that. I don't remember this spiking up here. It could have. Nothing comes to mind. So we're sort of seeing, as I said, look, this is after a doji market indecision. We're seeing a bit of a sort of bullish explosion from the lows, closing quite strongly above last week's previous highs. We're sort of moving up. So I would still expect, I mean, if you can see, you can't quite see it on this one here, can you? If we drag this up here, you can see that the stochastic, I can't even say the word, is rolling up, is about to cross over, coming out of the oversold area. So as that sort of starts to cross over, you're going to see a little bit more of the market confirmation that we're going to be seeing a little bit more buying and we can expect to see a little bit more upside. As to how high, well, yeah, we're going to have to sort of wait and see. But, there's obviously a couple of little strong points around here and it depends what time frame you're really wanting to trade. Obviously, we marked these ones out. I think they were on the 4 hour just then. So these are the points where I would sort of safely sort of say if we can break this one will be a body fill on the D1. I think that's generally a good place for people to go, yep, that's enough for me. Wick highs is obviously showing sort of, where just the max of what we got there kind of thing. And these are on the daily candles. So if we can break above this 56, then I think again, we look for the body fill. So we'll be looking at 65. And that's a good sort of, 100 tick move kind of moving through here. Ultimately, this is our range at the moment. You can see on the daily how well this is just, as I said, like if you go back, you can just see how much the market has just been bouncing it back and forth. And these are great trades. If you want to trade the range, like you've got a pretty high chance here that if you're selling it at this zone, you can target this zone. If you're buying it at this zone, you can target this zone. Obviously, this time when you sort of bought it here, you didn't quite get it. But if you were selling, bang, boom. And that's why you got to look for sort of like, okay, I mean, it wasn't just a one-off thing. Here's 1, 2, 3, 4, 5 attempts to get over 65 without a daily close getting there. Um, so, there was indicators, and that's, again, 12 ticks, sorry, 120 ticks up to that sort of resistance zone. So this is where we're sort of looking. Obviously, we're coming in a bit of a sort of downtrend channel here. So not so much of a channel, it's a bit of a, it's almost a little bit wedgy if you kind of look at it, depending how you're sort of going to drag your things. But certainly if we look at this in a sort of pretty sort of basic look, this resistance has been done here, been respected here, and respected here. Haven't quite got here yet, so I wouldn't sort of call this so much. But then you can start to go, okay, look, on the downside, we've been respected here, respected here, respected here, respected here. So there's quite a few sort of points where we're going to say, okay, yep, bang, this is a nice little area that we're sort of respecting on both sides. So downward wedge generally is a bit of a bullish sort of turnaround, reversal kind of setup. So once we sort of get above this falling resistance, above what would be short-term sort of swing high, I would expect to sort of be moving back up over here. A close above 65 will be quite significant because a close above 65 means we're going to be going up for these 80s. And again, this is the big thing. If we can sort of get onto this 80s zone, then that's when we're going to be moving up. And of course, then you're looking at, if we sort of drag these up a little bit higher, now you're looking up 2000 plus. I think if we can sort of get a close above this, obviously, this isn't happening in the next couple of days, but once we can get a close above this zone over here, these are the levels. 2000 plus isn't out of realm of possibility at all. I mean, you've seen a lot of churn through what would be this sort of zone up here. So I'd have to sort of draw it up a little bit better to get some better sort of closer targets, but that's just a general idea of it all. So we've got a bit of a sort of a bit of a wedge coming down here, which is a bullish turn. Again, you can look for sort of like how you want to sort of measure your moves out of these sort of things as well. We could be sort of looking down here and also then be dragging something up around this zone here, which obviously still tends to line up quite well as well. But again, these are all sort of how tight you want to sort of do your lines, where you're calling your highs, your lows, and that. But it gives you a general ballpark of if we get the break out of the wedge, if we get a break above here, where may our targets be? And I wouldn't say that 2010 to 2020 wouldn't be impossible. We've obviously been there quite recently, as much as where was this in May? So 3 months off here.